many entities, many organizations, many international and INGOs organizations need or require effective payroll computation. Most of the businesses fail to cross from 1 year to 5 years due to losses. Some part of the losses do come from the salary expenses, where control is not properly effected. Therefore, it is very important for you as the CEO, the directors, the owners of the business to be well concerned about your expenses, and above all your payroll expenses. Among other expenses, payroll or salary expenses contribute grossly. So this is payroll part 2. We have done payroll computation part 1 yesterday, so we are going to build part 2, and this is what we discussed yesterday. And I offer, if you did not watch us, ensure that you go to the video of yesterday and you look at that. In summary, we look at the content of the payroll, which is actually this. That is column row 7. We look at that payroll up to serial number, the name of the staff, the position, and the duty station of that particular staff, the contract date, today's date, next date of contract renewal, then the month left until contract renewal countdown, contract type, currency, basic pay, arrears, housing, medical allowances, overtime, gross salaries, gratuity, adjusted gross salaries in local currency, National Social Security Fund 8%, National Social Security Fund 17%, total employee cost, total taxable cost, PIT, cash advance repayment, total deduction, and net pay or net salary. So that was that, and we are so much interested to know how this is built, how all those content relate to one another, and how important are they in cost control for you who is the head of the organization, and for you who have to account for the money to the donors, or for you who has been recruited as an accountant and you have to do effective work to the directors of the companies. So we did one example. We said, take for instance, in serial number one, if we had somebody called Naphtali Oprah. Naphtali Oprah and a name of staff, the name is called Naphtali Oprah. Naphtali Oprah. Oh, we are there, seeing very clearly. Naphtali Oprah. Position is logistics, G2 station, Cape Town. Date of contract renewal, 1st of January 2025. That is the date he started, probably. today's date, somebody is making the payroll on 15th of February 2025. Next date of contract renewal 31st is running for 1 year, 2025 December. Is left with 11 months for contract to be renewed. Is on fixed term, currency in US dollar. The basic pay is 1,000. There's no any money that he worked for and was not paid. He's earning $150 as housing allowance, doesn't have medical allowance, doesn't have airtime for that particular month. His gross pay is 1,150. How did this one come? Due to addition of this, we said gross pay is basic pay, arrears, housing, medical allowance plus overtime. Or any of those allowances depends on the types of the company. This is not specifics, and the time depends on the countries, depends on the policies of that very countries, and depends on the policies of the company, of the organization in which that staffs work. Then we have something called gross gratuity. Gratuity is 1/12 of the gross salaries. This is prorated for 1 month. You can see the formula there. If you are able to see the formula up here. Then 8% is actually 8% of the gross. This is employees' contributions. We have 70% of the gross. That is what? That is employer's contribution. We have something called total employee cost. Total employee cost equal to basic pays plus all their allowances and arrears plus gross pay plus 17 totals to what we so call total employee cost. This is very important for you who want to start a company. You have to know how much cost you have to pay for a person you are going to employ per month. Others are paid at the end of the month, others are kept, they are accrued. So I hope I'm fast because the detail of yesterday, the details are in the video yesterday, and that look for that video. It is very slow, and we did it. Yes, the details are there. Then we have taxable cost. Taxable cost is gross minus 8%. 8% is employee contribution. That's why we are deducting it here. Q8 represents the gross, which is here, minus 8%. That is cell T8. So I hope this is clear. This video will be posted. You'll be able to follow. Then we have PAT. PAT is actually tax rate times the total taxable cost. Just W8 times taxable cost is taxable rate is WRR. This depends on the countries. Other countries charge 10%, others 5%, other 15%, other 30%, other 20%. Depends on that percentage. All incomes are taxed in other countries, unless if you get the waiver. So cash advance depends on the policy. Is not the same. Other organization, companies, entity doesn't allow, others do allow. You need to deduct. Once you have given cash, it is a good practice, financial practice, that you need to deduct the advances given for that particular month, unless otherwise. There are policies, it's also there are HR policies. Like if you have given advance, we have some percentage that you need to deduct. You may not deduct all at once. Total deductible, 3 column. We have to deduct 8%. We have to deduct taxes out, and we deduct now any amount given as advance. It's called total deductible. Why do we need total deductible? Deductible amount is because we want to get net pay. net salary. So net salary, it is just the gross minus total deductible cost equal to net salaries or net pay. It is there, very clear. Q8 minus Z8. So that is that. So now let's go and build and continue building. Let's say the next person is the next person, let's say James. Next person is called James Homer. James Homer. This guy is FM. Say finance manager. And this guy is based the same location. Started together the 1st of the 1st. Today's date, the same date, the day when you are working on the payroll. Next date of it is in a policy that this organization gives 12-month contract. 12 months minus January, you live with 11 months. That is how 11 months has come. Because Jan is done, this is a payroll for February. Currency, the same currency is dollar. Next one here is so basic pay. All this information should be extract from the contract of the staff's contract. 1,800. The guy doesn't have any areas. He doesn't have any areas. That's how you change. Remember, this is without dollar. You want to just change it, you click on it, you come to browse, then you click on it. You have paired them with the same currency. Housing allowance is constant amount for all staff. Other organizations use percentages. It doesn't have any of this. So you just want to get the rest of this. What you do, you just highlight, or let me not even do it like that because we have to go slow for some learners. I just drag that down there. You can see the formula is already picking. I can just either drag the whole of this like this down. I highlight, then put the cursor there, then drag. It has picked accordingly. Or I can do one by one, all the same. So let me drag, then now highlight and drag down. Made a mistake. What you do, you undo, you check yourself, see where the issue is. Just come again once more. You need to highlight, then roll down. Doesn't come, you undo. What the issue here? Let me test. The issue is percentage. All right, let's calculate it. Because reason here we have not referented. I mean to say, you click on it, you identify where W is there, W6 times W8. So your W6 should be up here. So this is the tax. You see the tax is here. Okay, so let's now do it. What you can do, because this is where the tax rate is represented by W6, this cell here. You can see how we are able to see that cell. All right, so what I will do, in order for the rest of the formula to pick this cell, I click on that, then I will reference this cell W6. By so referencing, you click before W, then you put a dollar sign. I put a dollar sign here, then also I put a dollar sign. I put the dollar sign before, not after, before figure 6. The referencing, you have to put the dollar sign before the word and before the figure. If you click on it, it's already referenced. If I want to drag now, it will accept. See, I've accepted, and this one here, I can just continue and drag them, because that one needs referencing. When we are now doing payroll computation for this guy for a person at at 10, we'll just pick the same thing. So let's continue building. Let's continue building of payroll. Therefore, we have okay. Let's do the third person, third, fourth. We have fifth. We have sixth. We have seventh. So here is Chris. Chris there. Chris, we have somebody called Quench Tyree.